gentlemen. And thank you, Yusuf, for that wonderful introduction. And thank you, Tajinder, for joining me here today on what is such an important topic, maintaining profitability and scale. No easy feat, and I want to jump right into it with you. Given the current market dynamics now, what are your thoughts on fintech growth and profitability?
I believe fintech is, it's just getting more important every single day, the way I look at it. There are a lot of problems that fintech is solving, whether it's a last mile problem, access to banking and payment systems, reaching out to diverse category of people who want money to be moved around. So I see it as getting more and more important, in the midst of AIs and blockchain. It's just giving it more wings.
Absolutely, and we talked about this a little earlier, just about the collapse in fintech funding that we've seen around the world, perhaps prompting a shift in investor priorities, and then emphasizing more sustainable growth and profitability. What does this mean for managing cost structures within fintech companies?
I have a different view, actually. I don't think that the capital is drying out. I think this is something that we see pretty much every 5 years, and I've been in the market for long enough to see that. There was free money because of COVID, because of helicopter money that came into the system that basically chased some of the yields that were available, possible unicorns and possible FOMO that was coming in over there. But for the right fintechs, I don't think the money has dried out. We invest ourselves. We fund startups as well. Finvasia has been completely bootstrapped over the last 15 years. We are present across the world right now, more than 600 people working in 10 different countries, over 50 regulations and registrations that we have. The problem is, which I believe, and with a lot of humility, I believe some startups start with funding as a milestone. And when you're starting a business where your milestone is that I'm going to get my first round of funding within the next 2 years, you're not really working towards solving a problem. At the end of the day, every business is, if somebody is giving you his money, if you look at it in a very fundamental terms, it's basically how much value are you imparting to the person for which he's willing to give you his money. And if you can scale it up, if there is scale to how many more people you can serve in a given time frame and how much value you can create for a larger number of people, you'll get more money. As a business, you'll be more successful. So business has to be built around use cases and around problems, not around funding.
Absolutely, fantastic. Thanks for that insight. But again, I think I just want to unpack profitability a little bit more in this, particularly in this climate. And I want to understand the role of technologies, right, in driving that efficiency within the business and, again, a move towards profitability. Do you think it's easier for fintech firms to do that compared to their perhaps more established financial institutions that have some legacy systems?
Fintech has much more chances to be successful than the traditional financial legacy systems because they're more agile. They can fit themselves into the changing demands and the changing landscapes of the world. About 10 years ago, we saw blockchain becoming the most important thing, and now we're seeing AI becoming the most important thing. And as a fintech and as a general pain tech, because Finvasia is really a pain tech, and I'll explain to you what that really means. I believe our fintech arm. The way we look at it is, you look at a problem and identify what technology I have or I can build to solve this problem, and then you focus on scaling that up. If you are chasing the technology, so typically the problem that comes up is, I start building something on blockchain, a very simple use case. I start building something on blockchain. I believe I can, solve a problem with blockchain. And while I'm doing that, I realize, wow, now there's an AI and I can build on top of AI. Let me get some AI engineers. Let me get the GPUs that I need, which can cost me hundreds of millions of dollars. And then you're chasing around. So we need to, in general, as a community, fintech community, we need to build on it, make it, mature the product, gain traction onto it, move on to the next one. It takes patience, it takes persistence, perseverance, but that is the way to do it, to look at it, in the traditional sense and see, build it, test it, deploy it, then go back to rebuild it again. And that is important if you want to extract value out of what you've built in technology products.
And you think this is becoming all the more important now in this sort of, as you're trying to maintain profitability?
It is, I believe, personally, we are, very orthodox at Finvasia in that respect. I believe it was always important. If you subtract the specific, eras in last 20 years, for example, PayPal started this beautifully. I'm going to burn more money than I can, than I need to just bring in people. He was paying $50 to anyone who was going to introduce him 3 clients. And at one point, Elon Musk was burning more money than he could actually raise. And then Amazon followed the suit and built up this massive business, by burning investors' money for the last 10, 12 years. They had vision, they proved themselves, but also there are a lot of and maybe 100 times more companies who tried to do similar thing, but they failed. It's because businesses, it basically created that, FOMO that if I can raise money and I can keep on doing this and paying for the network, I might become profitable. It works the other way around.
And that's exactly what I was referring to, right? Because capital has dried up a little bit, and again, you disagree, but we're seeing that emphasis on cost structures, that we're seeing that emphasis on cost management, that it's not growth at all costs, right? And just the examples that you just described. So I think there is a bit of a shift from that perspective.
If you look at, if you say that the free money has disappeared, yes, that is true to some extent. But if you talk about sticky money, investors who've been around and been funding, they're always looking for companies who, who are more stable. Like this, it's a cycle. Stock markets have crashes and they have corrections. I believe this is a small correction, really and it's a healthy correction. It helps, startups to sit down and say, am I just running after an investor or after my user? What am I running after? So I believe there is, the froth has dried out, but it's not drying of capital, it's a froth that has disappeared.
Fair enough, fair enough. Now you mentioned there's money for the right kind of fintech firm, right?
There's always
so what does that mean? Who's the right kind of fintech firm?
Let's break it down. Let's say when we talk about fintech, the absolute fundamental is finance. And below that, we are talking about money. There are only 4 things, at large that money solves. Money is a storehouse of value. Money is a mode of transfer of value. Money is a mode of deferred payment. And money is a mode of benchmarking, And everything around money is around just these things, Can you transfer value? Can you store value? And, then if you are storing value, can you enhance the value? Things like that. So if you look at those fundamental principles and if you look at, solving problems for those fundamental things, half of the world is still unbanked. Half of the world still does not have access to digital, platforms. During COVID, there was a big rush towards going into digital platforms because you can't really go and give cash anymore. So there were tailwinds that came in, but the problem statements still don't change. We have such a large world that is still unbanked. We have so many use cases and payments that still have not been resolved. And those are the right kind of problem statements that are still low-hanging fruit. They're more complicated fruits, but these are low-hanging fruits.
Yeah, absolutely. Now, just talking a little bit more about scaling up as well, what do you see are the current sort of challenges for fintech firms as they're trying to scale up?
I'll take a step back. I'll tell you an example about me personally and my brother. We started Finvasia right after the financial crisis. We started in 2009. There was nothing like funding, in that time. Everybody was burning. Lehman collapsed, Bear Stearns collapsed, and all those things collapsed. So essentially, when we started out and we started building, businesses as wealth management, and then we started growing into all of these things, we were looking at let's focus on solving a problem. Let's focus on bringing a solution onto the table and bootstrap on top of it. And some of the best companies were built like that. So while funding can be important at some stages, but I think problem statements become even more important to solve in that cases.
Sure. Okay. And again, just in terms of your growth, can you tell me a little bit more about your current growth strategy? Where is Finvasia's growth coming from?
Sure. I believe Finvasia is a pain tech. So the four different areas that we touch is we touch fintech as an area or financial services. We touch healthcare and health tech as an area. We touch real estate and technology in general. And why I call it fintech is because I, along with my co-founder, who's my brother as well, we are engineers. And when we look at a specific problem statement, we identify, can we create science or knowledge that can perhaps solve a certain problem and remove the pain? So for example, recently I was discussing with one of my scientists. We funded one of the leading technology university in India to start a Finvasia Excellence Center. And the goal was to build up maybe something like a Band-Aid that can actually be, put on the skin, and we can track all the, the lipid profiles, the glucose profiles, the, RFTs and LFTs of the body and things like that. And how do you do it? Basically, the way you do it is, if you have an electronic circuit that can basically take, the different density of fluid that's coming from the body via micro needles, and the electric signal will have different, wattage into it, and then you can apply AI on top of it and map it against certain cells moving into the blood or interstitial fluid. You can perhaps identify potential diseases much ahead of before they happen. That's an example of being pain tech. Not really in the sense of pain that comes in with the needles, but same goes in financial services as well. When we started, we started as a wealth tech, or we started as a wealth management company. We were managing money for some hedge funds of Wall Street, and we realized, wow, this is my first year. I made so much money, but I'm paying so much more money in brokerage. Let's just buy our own licenses. That's how we got into the retail brokerage. And then we were sitting and thinking about it. Brokerage does not sound well. Let's make it zero brokerage. But then we felt zero brokerage doesn't make sense either, because, okay, there's Robinhood that's doing that as well. And then there's payment for flow and all of those, things that might or might not be right. We are like, okay, let's buy the whole food chain. We become professional clearing members. We build our own technology. We buy our own tickets, and let's make the whole food chain zero cost. We became one of the fastest growing, broker in India, or Shunya, which is one of our platform, became the fastest growing broker. Right now, we're adding about 50,000 users a month on it. But it's again, pain tech. Pick up a pain point, find a way to solve it, put genuine effort towards solving it, funding will follow.
Okay, fantastic. What about from a market perspective? It was great to get it from a product perspective, but from a market perspective in terms of growth, what are you looking at the moment?
I think in terms of market, geographically, we have offices in 10 countries across the world. I look at Middle East as an amazing breeding ground. I think the regulators over here are so forthcoming. It's just, it's just so welcoming to see, and that is the reason why we see the MENA region or the Middle East region growing in itself. I see it as a very promising ground, in the coming years, and I've been coming to Dubai since 1996, and I've seen what Dubai was in 1996, the Sheikh Zayed Road back then and now, and I believe this is where we will see a lot of, like just 5 years ago, people would say, we might also have an office in Dubai. Now they say, well, you must have an office over there. So I do see this region as a very promising one.
Fantastic. But you said regulatory challenges. What are the other regulatory challenges that you're seeing, say, in other markets that perhaps, as you said, is not present here?
So one of the problems that fintechs typically have is, and I'm saying it from an engineer's perspective, it's very easy. We can go back, build the software, try to build a use case, and then voila, I have a software or a product that I can sell. But then you go to the regulators, you get asked for a license, you might or might not get the license, you might have conditions, or there might not be a license even attached to it. And the whole feedback loop of when you build and conceptualize the product, you get the license, you can do MVP, the world has changed. I'll give you an example, and that is to the credit of Middle East in general and Dubai in general. We had this one idea around fintech. Last year, I was talking to one of the officials from the IFC. I told him we have this idea. We are still not working on the MVP yet because we don't know if we'll get the license. He's like, I'll invite you, personally to my office. Come over there, give me the presentation. If you like what you're saying, we'll give you sandbox mode to experiment with what you want to do.
Right.
This kind of feedback loop makes it much faster for fintechs to solve problems, because now they know that if regulation is extremely important in fintech, money is the most important thing. We internally say health and wealth are the two most important things, and that's why Finvasia is there. People spend 80% of their waking hours earning money. It's a very sensitive topic, and they don't understand money. If you ask someone about wealth tech, investment, stock market, bank accounts, and they get confused. Taxes, all of those things. So it's important for regulators to step in and make sure that people who don't understand something that's so important is done in the right way. At the same time, creating that fine line where innovation can also go hand in hand with security. And that is what allows the feedback loop to get smaller and to innovation to become faster and more responsible.
Right. More responsive, absolutely. I think that's definitely a key point. Are you seeing any good examples of regulatory management in other parts of the world, maybe lessons here for policymakers in the Middle East?
I think, I think Middle East is doing amazing. We have licenses. We have more than 50 regulations or registrations that Finvasia is licensed with. I interact with a lot of regulators, whether it's in Europe, Asia, South Asia, Africa region as well. I believe Middle East is doing an amazing job, and Dubai, for that reason, is maybe coming at the top in terms of how they're approaching it, both responsibly and fostering innovation as well.
Okay, absolutely fantastic. We just have a couple of minutes left, and I think I just want to close on a question to just delve a little deeper into, of course, you as Finvasia, you also invest in fintech firms, as you said. What do you look out for at the moment, and what would your advice be to these fintech firms?
My advice, and we do look at, I get a lot of pitches, and we also have this internal program within Finvasia. We have over 600 or 600 odd employees, and we tell them, if anybody has a business idea, you come to us, we will fund you, we will provide you with the resources to become an entrepreneur. At the end of the day, I believe if any startup, any fintech startup is looking to raise money, don't chase money. Money follows. There's so much money in the system that wants to chase a fintech that is actually solving a problem. You should focus on, what am I doing with my product? Who is it going to help? How much can I scale up this product? How many people can I reach with this? What compliances and licenses requirements are there? In financial services, being compliant is the most important thing outside of being innovative. So if you have all of those things correct and right, you would get investors and VCs following you. For that reason, even today, after 15 years, I maybe get one email from a VC every month asking us, are you open for taking any investments? And we bootstrapped Finvasia over the last 15 years. So there's a lot of money in the system that wants to chase the right, the product that is out there that is solving a problem.
Fantastic. Thank you so much, Tajinder, for all of your insights. We appreciate it. Please give him a warm round of applause. Thank you.